So yesterday I showed you DXY, how we were able to look for our order flow, looking for the liquidity that is residing above here. I showed you breaker, I showed you our entry point. We did it live. I followed through till price delivered to this our target, our point. You can see that it came when you go through my last video, February 2026. You will see that eyesight will be looking at this up, this high for price to reach and sweep the liquidity, and you can see that it sweep the liquidity, right? So you can see everything happen. Go back to the video and you will see for yourself. Now today I want to show you, this is DXY, that is the dollar index. So I'll be showing you correlation analysis, where when you analyze your market on the DXY or the dollar index, then you go to the other pair, which is the GU or GBPU or EU. For example, let's check GU. You can see the GU sell yesterday. Go back to the DXY. You see we were looking for what? This is February, which is yesterday. We looked for buy. So when you establish your position on where price is heading on DXY, what you do is you correlate it. You go to the other pair, price will automatically sell on GU or Euro. Now, so let's go to GU. So GU yesterday, which is Thursday, you can see the low that the market created. Fill this fair value gap, break this structure, look for our entry, put our stop loss here. Go to GU, you see the high. We had a very good high, and what will you be doing? You will look for a break of structure. Let me show you. You can see the break of structure here. Break of structure happened perfectly here, right? So you can see the break of structure here. Now I'm just showing you how you correlate your price. This is correlation analysis. You go to your DXY, do your analysis, go to GU or EU, then you do your own analysis there, which you will be selling. Yesterday will be, when we come to check, I just decided to show you on DXY without touching any price, so that the next day I will show you what happened in DXY. The opposite happened on GU and EU. Let's check EU. You see this high, you see break of structure, change of market structure, retracing back to the structure, fair value gap, and you can see how price delivered. It's not as clean as how GU have delivered, but that's just the price action for you. So let's quickly check. You see we are able to establish where we placing our stop loss. Our stop loss will be here. Our stop loss will be here. So you can see. So you don't need any ambiguous analysis again, because you have already analyzed your market on the DXY. Coming here is just to establish what have happened there, so that you translate it here and look for your entry. So you see, by when it break the structure at the breaker here, so we were looking for market to trace back into the breaker, and you see price traded back into the breaker. It's simple. Price traded into what? The breaker. You see DXY, price traded back into what? The breaker. You can see the correlation. So our entry, we are looking at our entry at this level, this breaker. So that is sorry, see our entry. Where are we targeting price to reach? We are looking at the liquidity residing below this price action. We're looking at, so we'll be looking at price sweeping the liquidity below. You have to identify each time market retrace, it will be looking for the next liquidity to sweep, and that liquidity are residing on the high or on the low of every retracement or change of market direction. So you can see that we have liquidity residing below these lows. So we'll be looking, this is our first point, this is our second point, what we're looking at here, which you can see market have traded and swept the liquidity. So this is just simple. Go to DXY. Did you see market trading this, the liquidity that is above here? You can see that is the same thing on the GU. So you translate your analysis from DXY to that. Our stop loss will be here. Our stop loss will be here, which is our XL. So our XL, we have a very clean price delivery. So go through your chart, you will see the same scenario. We had a market that traded, sweep these liquidities, came and sweep the liquidity above here, and it show willingness to what? To change direction. On the DXY, we have established that, and what happened? It breaks structure, came back to the other block or the breaker wick, our entry to our target. And you can see that when it reached this target, which is in correlation with this, go to yesterday live analysis that we have done, you will see that step by step I have shown you how to identify your liquidity, then your breaker, then you look for retracement into the breaker, then look for the next liquidity market will be looking for to sweep. So thank you. This is a short video to show you that, because I know some people will be saying, this is DXY. So you use the dollar index to do your analysis and go back to the other currency, so that you will do the opposite. When market is selling on DXY, it means GU, EU will be buying, and when market is buying or we are bullish on the DXY, it means we'll be bearish on the other. So thank you. Have a wonderful day ahead. Thank you.